All right, let's get right into it. Today, we're unpacking a single political announcement that sent an economic shockwave halfway around the world, landing right in the middle of the Indian market.
It really makes you wonder, right? How can one person's decision, thousands of miles away, make an entire country's stock market shake? Well, it's a masterclass in just how connected our world is, and we're going to break down exactly how it all went down.
Everything started with this one number, 25%. That was the proposed tariff on all goods from India going into the US. That single figure was the match that lit the fire.
So let's start with that initial shockwave, because when this news broke, the market didn't just stumble, it fell hard. It set a really dramatic tone for the rest of the day.
Think about this. In the first 15 minutes of trading, 5 lakh crore rupees of investor money just vanished, wiped out. That is a staggering amount of wealth gone in less time than it takes to get through your morning emails. The reaction was absolutely brutal and immediate.
The numbers here tell the story of the day's fight. You can see both the Sensex and the Nifty 50 open deep in the red and almost immediately hit their lowest points. But look at the closing numbers. They actually clawed back a bit of ground. So this wasn't just a free fall. It was a story of pure panic right at the start, followed by a very shaky, cautious attempt at a recovery.
Now, to really understand the drama of that day, we have to look a little deeper. We need to decode the tremors and look at the technical battle lines that traders were watching. These were the invisible lines that decided whether the panic would keep going or find a floor. Okay, so two really important ideas in trading are support and resistance. The easiest way to think about it is this. Support is like a floor that the market hopes not to crash through. It's where buyers tend to jump in. Resistance is the ceiling it struggles to punch through, because that's where sellers usually take over. And on a day like this one, these levels were everything.
This right here? This was the battlefield. Traders were glued to these specific numbers. For the Nifty, that zone between 24,600 and 24,700 was the first line of defense. But the real, absolute must-hold floor was 24,500. If it broke that, things could have gotten much, much worse. On the flip side, any attempt to rally kept hitting a wall right around 25,000.
But here's where the story gets a twist. In the middle of all this red ink, one part of the market actually fought back. The Nifty Bank Index showed some serious backbone, bouncing 1.4% from its lowest point. So not everything was in a nosedive, which of course makes you ask, why?
And that question leads us perfectly into our sector showdown. You see, this tariff threat didn't hit every industry the same way. Not at all. It basically split the market right down the middle into clear winners and losers. And the divide was stark. On one side, you had the sectors that got hammered. These are India's export giants, pharma, textiles, electronics, companies that depend heavily on selling to the US. But on the other side, you had the defensive sectors. Think banking, telecom, businesses that are focused on the Indian economy at home. With exports under fire, investors basically ran for cover into these domestic-focused stocks, seeing them as a safe place to hide.
And if you want to know just how exposed some of these sectors are, just look at pharmaceuticals. Over half, 50% of the exports from India's biggest pharma companies go straight to the United States. So for them, a 25% tariff isn't just some small problem. It's a fundamental threat to their entire business model. And that explains why those stocks got hit so hard.
Now, a shock this big never stays contained in just the stock market. Let's zoom out a bit and look at the ripple effects that started to spread across the whole Indian economy.
The impact was almost instant. Economists and rating agencies started frantically doing the math. The agency ICRA, for example, pretty quickly cut its GDP growth forecast for India from 6.5% down to 6.2%. That's a huge cut, all based on a single policy threat.
At the same exact time, all eyes snapped over to the currency market. The Indian rupee weakened to 87.74 against the dollar, which is uncomfortably close to its all-time low. A weaker rupee, as you know, makes everything we import more expensive, and it puts a ton of pressure on the central bank. The shock was hitting from all sides.
So, this all brings us to the most important question. The one everyone is asking. What happens now? After the shock, after the chaotic day on the market, where do we go from here?
Right now, the market is pretty much just holding its breath. Everyone is in wait-and-see mode, with their calendars marked for these key dates. August 1st is when the tariffs are supposed to kick in. Mid-August is when trade talks could start. And hopefully, by the end of the month, we'll get some clarity on whether these tariffs are for real or just a negotiating tactic.
And that leaves the market caught in this massive tug-of-war between hope and fear. The hopeful case is that talks will work, that this is all just a bluff to get a better deal, and that maybe we'll get some stimulus at home to help out. The fearful case, though, worries about extra penalties, foreign investors getting spooked and pulling their money out, and the fact that the market was already valued so high, making it extra vulnerable to bad news.
So we end up right back where we started, with a massive question hanging over everything. Was this just a short-term storm in a teacup that's going to blow over? Or are we seeing the first signs of a major shift, the beginning of a totally new and much tougher economic climate for India? Only time will tell. Thanks for joining us for this explainer.